Hi everyone, good afternoon, and really appreciate your time here. Because we have a very nice panel, very experienced professional in their individual fields, and I'm sure we're going to have a very enriching experience, knowledge sharing, and at the end possibly we'll open for the questions because we have a time constraint and time has already started. So as the topic says, the leveraging technology to improve efficiency in banking, current trends, and the roadmap, I think we all agree that banking have been on the forefront in terms of adopting the latest technology. They have been looking way beyond, any other sectors in the industry, in India is looking for. So my first question, I will go to Suresh, right? So Suresh, if you can help us understand, how things are moving, how banks are adopting the latest technology, what your experience have been, and how do you see it's moving in the future?
The banking industry as hello. The technological aspects, if you see, the banking industry has undergone a lot of technological transformations in the recent years. And it has become an essential for the bank to stay competitive, at the same time to increase the operational efficiency. And all these things they will have to do under the strict compliance of the regulators. That is the first point. So how that it's not that at absorbing the technology, at the same time while absorbing the technology, they will have to have the regulatory norms and other guidelines in space, whether they are violating this or not. So this is what I would like to bring out. And I will come to the point and other things on the security and other things later on. What are the different types of technology which bank can adopt, and what are the best practices that we can follow it strictly in compliance with the regulatory norms in place. Thank you.
Thanks, Suresh. So I'll go to the Pradeep. Pradeep, if you want to add something on top of what Suresh said, especially if you look at the ever-changing cybersecurity requirement, regulatory requirement, how do you see the best practices that are coming up in the banking space?
See, I think in general, what is now happening is that as the Indian growth story continues, essentially banking is becoming more and more important. In fact, I mean, think about it, maybe even a decade ago, we would never have been able to imagine that one of India's banks would actually, and that to a private bank, would actually become one of the top banks in the world by market cap, which is what has happened with HDFC, right? The result of all this has been that even RBI and all the other regulators are actually going to start focusing more and more to make sure that we don't actually have a 2008 or other such scenarios that have happened earlier in America and the UK and so on. So we can expect a lot of increased regulatory tightness. We can expect that what is actually going to happen now is that the RBI will expect increased security, increased privacy, and increased compliance on every aspect of the banking world. This includes digital channels, this includes voice channels, which is where, of course, assertion is primarily focused on. And this also includes face-to-face channels. So literally, one can imagine that what's really going to happen going forward is that when it comes to the world of compliance and security, we can expect more and more investment from banks into that area simply because of regulatory pressure.
Thanks, Pradeep. Really appreciate it. I think security is certainly a very important aspect of from a banking perspective. Reason being that bank manage the financial of the individual users, and they have to be really on toes to adopt latest technology, right?
I'll just add one more point. Okay, one of the things that has actually happened right now is that the loosening up of many norms in terms of voice infrastructure, in terms of data infrastructure, has actually led to a trust deficit. You receive an incoming call or you receive an incoming email. We were, in fact, just discussing this beforehand, right? And you receive an incoming email or incoming call. How do you, as a consumer, trust that this is your bank or this is your insurance agency, and whether these people who are talking to you are not trying to defraud you? So the trust aspect is actually going to become extremely important. And I think the actions of the regulatory agencies will be focused on actually enhancing that trust again.
Great point, Pradeep. I think if you look at the trust aspect of it, while you have to win the trust of the customer, there's a concept called zero trust. You have to stop trusting as well your end customer, right? So it goes hand in hand together. Anyone else want to add to it what has been spoken on this particular question? Yeah.
Yeah, so, look, you ask any business product guy in a bank, they don't like the risk people. If you ask IT guys in a bank, they don't like the security people. But the problem is that is the basic essence of business. Unless you do that, you will not be able to survive in a long run. Take a just metaphor of where India is today. India is today on a rise. There is a wave which is going up. Now, even if you are the small one or a big one, it doesn't matter. If you ride on the wave will go up. Only one condition, there is no hole on your wave. So the hole is the security. So if you think that's as a business perspective, then it becomes like a mainstream rather than being the other way around.
Great point, thanks. I'll go to Sachin then. Sachin, see, we have been transforming from a technology point of view, adopting technology, going very fast track, right? Especially digital transformation part of it. You see a lot of being enforced from the banking's, regulation point of view. So where does this overall user experience comes into picture? Do you put that in the forefront, and especially from non-techie customers, especially the rural customers? How do you look into that aspect of it?
No, that's a great question to start with, actually. We've seen a huge tectonic shift, as we've moved from Web 1 to Web 3, okay? And banks have been in the forefront to adopt pretty quickly, on all the three layers. So if you take the UI layer, you take the logic layer, and you take the data layer. All the three layers, at every transition, banks have been in the forefront. During Web 1, we had most of the products being browser-based, with the logics being on the websites, and the data being traditional server-based data. In Web 2, we saw it transitioning to mobile-based interfaces, and then on the logic and the data is largely on cloud now, and the logic being on apps. With Web 3, what I see is a huge shift and an interesting one that can happen. On the interface side, you can see a lot of VR, AR coming into the picture. So there are a lot of banks which will probably raise their hands, getting solutions which are VR, AR based solutions, and having AI as the logic layer. And banks would largely rely on technologies like blockchain at the data layer. So that's the tectonic shifts which I feel will happen, and banks will be adopting it as we move ahead.
I think great point, Sachin. Coming back to Vaidyanathanji, I think you have a technical experience as well, and now you're on the space of completely CI space. We have two different set of users today. If you look at the users who are not very tech savvy, right? Maybe old age users or maybe a rural users, and then we have metropolitan users who are very good at understanding the technology. So how do you see this entire transition that we see from adaptation of technology as a bank, and then making sure that your end user also understand that, and it leaves it elevate the overall security posture of the organization?
See, if you were to look at bank were the first to adopt technology and implement newer technologies. And if you look at today, majority of the customers, whether young or old or anybody, they're not actually going to the bank. They are going to their mobile or to their PC or their laptops where they do banking. So the challenge is to keep the interface point very simple and stupid. I mean, if you buy an iPhone or an Android, you don't get an education or a training somewhere you sit and how to use it. So people play around, you learn it, and so the challenge is to keep this mobile app or the interface, internet banking, all this very simple and stupid, where anybody from, say, 10, 12 years to an 87-year-old, I say 87 because I was pleasantly surprised when I met my mom after 6 months, and she has a brand new Android, and she was doing everything from there. And surprisingly, she was not texting, she was actually sending voice messages to me. I've never used voice message. So being a tech savvy, I have never tried that. But the technology, it's part and parcel of everybody's life. So the challenge is to make it simple, stupid, seamless, and something which is secure. People trust it. I mean, the challenge of the bank is today scamsters and you get. I mean, people come with so much of brilliant ideas to scam you of your money. People have to really trust the mobile. Whether my money is safe in the bank, whether I can do a transaction on that. So, I mean, apart from the security, I mean, it has to be very easy to understand. I mean, at the moment, we are in a phase of building the bank and building technology. One of the things that we're doing is building a mobile app and an internet banking app. So, I faced a challenge working, I mean, when I was traveling abroad, and I'm used to using technology on my desktop. I hardly use the banking app on the mobile. But when I tried using it on my phone, the navigation, everything was different from internet banking. So I was trying to switch on the international transaction on my card, and I could not because I could not find it. So ease of use, simple, stupid, I mean, that's the way to do it. I mean, technology for the sake of it, keeping it complicated only for the tech-savvy customers, that's not the way to do it. I mean, you have to look at it from a customer perspective, whether it is easy for him to understand, use, and then feel good about it. So you have to keep it closer to him rather than keeping closer to the tech guys.
Absolutely. If you look at the trust aspect of it, while you have to win the trust of the customer, there's a concept called zero trust. You have to stop trusting as well your end customer, right? So it goes hand in hand together. Anyone else want to add to it what has been spoken on this particular question?
Yeah, so look, you ask any business product guy in a bank, they don't like risk people. If you ask IT guys in a bank, they don't like the security people. But the problem is that is the basic essence of business. Unless you do that, you will not be able to survive in a long run. Take a just metaphor of where India is today. India is today on a rise. There is a wave which is going up. Now, even if you are the small one or a big one, it doesn't matter. If you ride on the wave will go up. Only one condition, there is no hole on your wave. So the whole is the security. So if you think that's the business perspective, then it becomes like a mainstream rather than being the other way around.
Great point. Thanks. I'll go to Sachin then. Sachin, see, we have been transforming from a technology point of view, adopting technology, going very fast track, right? Especially digital transformation part of it. You see a lot of being enforced from the banking's, regulation point of view. So where does this overall user experience comes into picture? Do you put that in the forefront, and especially from non-techie customers, especially the rural customers? How do you look into that aspect of it?
No, that's a great question to start with, actually. We've seen a huge tectonic shift, as we've moved from Web 1 to Web 3, okay? And banks have been in the forefront to adopt pretty quickly, on all the three layers. So if you take the UI layer, you take the logic layer, and you take the data layer. All the three layers, at every transition, banks have been in the forefront. During Web 1, we had most of the products being browser-based, with the logics being on the websites, and the data being traditional server-based data. In Web 2, we saw it transitioning to mobile-based interfaces, and then on the logic and the data is largely on cloud now, and the logic being on apps. With Web 3, what I see is a huge shift and an interesting one that can happen. On the interface side, you can see a lot of VR, AR coming into the picture. So there are a lot of banks which will probably raise their hands, getting solutions which are VR, AR based solutions, and having AI as the logic layer. And banks would largely rely on technologies like blockchain at the data layer. So that's the tectonic shifts which I feel will happen, and banks will be adopting it as we move ahead.
I think great point, Sachin. Coming back to Vaidyanathanji, I think you have a technical experience as well, and now you're on the space of completely CI space. We have two different set of users today. If you look at the users who are not very tech savvy, right? Maybe old age users or maybe a rural users, and then we have metropolitan users who are very good at understanding the technology. So how do you see this entire transition that we see from adaptation of technology as a bank, and then making sure that your end user also understand that, and it leaves it elevate the overall security posture of the organization?
See, if you were to look at bank were the first to adopt technology and implement newer technologies. And if you look at today, majority of the customers, whether young or old or anybody, they're not actually going to the bank. They are going to their mobile or to their PC or their laptops where they do banking. So the challenge is to keep the interface point very simple and stupid. I mean, if you buy an iPhone or an Android, I mean, you don't get an education or a training somewhere, you sit in how to use it. So people play around, you learn it. And so the challenge is to keep this mobile app or the interface, internet banking, all this very simple and stupid where anybody from, say, 10, 12 years to an 87-year-old, I say 87 because I was pleasantly surprised when I met my mom after 6 months and she has a brand new Android and she was doing everything from there. And surprisingly, she was not texting, she was actually sending voice messages to me. I've never used voice message. So being a tech savvy, I've never tried that. But the technology, it's part and parcel of everybody's life. So the challenge is to make it simple, stupid, seamless, and something which is secure. People trust it. I mean, the challenge of the bank is, today, scamsters and you get, people come with so much of brilliant ideas to scam you of your money. People have to really trust the mobile, whether my money is safe in the bank, whether I can do a transaction on that. So, apart from the security, it has to be very easy to understand. At the moment, we are in a phase of building the bank and building technology. One of the things that we're doing is building a mobile app, an internet banking app. So, I faced a challenge working, when I was traveling abroad, and I'm used to using technology on my desktop. I hardly use the banking app on the mobile. But when I tried using it on my phone, the navigation, everything was different from internet banking. So I was trying to switch on the international transaction on my card, and I could not because I could not find it. So ease of use, simple, stupid, that's the way to do it. Technology for the sake of it, keeping it complicated only for the tech-savvy customers, that's not the way to do it. You have to look at it from a customer perspective, whether it is easy for him to understand, use, and then feel good about it. So you have to keep it closer to him rather than keeping closer to the tech guys.
Absolutely. Yeah, please.
So what sir was talking about, that the journey or experience will remain same for IB or internet banking or mobile banking, even for your WhatsApp banking. So this is called omni-channel experience, right? So the same experience, the seamless experience. If a customer has done some transaction yesterday from his internet banking and today maybe he's traveling abroad and he's using from mobile banking, right? The experience should remain same. He shouldn't get confused with the new interfaces, right? Yeah. And there's a change and there's a transformation happening around.
Correct.
If I were to give you an analogy, one of the best traffic regulated cities I have seen is Chennai. But the problem with the first timer,
priorities in terms of tech and as well as physical assets. I think once they move in tandem, then you can take a call maybe after 5 years or 6 years. Today, the mobile phone penetration for smartphones is breaching the 71% mark, which is a good thing. But that does not mean that everybody is going to transact through smartphones, right? They'll be using that for other purposes.
Still have a 30% left out, right?
Correct, exactly. So that'll take some time. So I think once that maturity curve is done, then probably we can look at the call, that's why. So that's one of the reasons why banks are still today expanding their branches and some of them are dialing back.
Yep. You want to add? Yeah.
See, on the penetration side, on the rural banking, right? If you see a couple of recent programs of government in India and NPCI and even the banks, right? For example, the voice pay over UPI. Recently, we have launched it, right? Okay. Then the UPI Lite, where using your feature phone, you can make the payment, right? Then the credit on UPI. Axis Bank and there are 5 other banks. We have launched that pilot last month in GFF, right? So these all are the programs that will increase the financial inclusion. These are the programs actually, alluring customers to do the transactions, right?
Absolutely correct. That's a very valid point. Thanks. Really appreciate. Anyone else want to add?
Yeah, I'll just add to it. I think whatever solutions we provide for rural banking, I think 3 challenges have to be addressed by the bank. And we've kind of covered it in parts over here. The first one is, I think the entire smartphone penetration and high-speed internet availability, that has to be addressed because in rural locations, that may be a hindrance. So as Abhijit, rightly mentioned, there are lighter solutions like UPI 123, right? Now, that does not necessarily need a smartphone. You can do it with a feature phone. And that will, help take us giant leaps into financial inclusion. The second one is largely centered around cash still being, rural areas being still a cash-driven economy. If you see the ATM penetration in the rural areas, you can on an average, probably have one ATM per 10 or 12 villages, right? So how do you make or provide solutions where cash can be also easily made available to the rural section? Probably have solutions like Aadhaar-based ATMs, right? You don't necessarily need people to have cards to go to ATMs and withdraw it. You can have Aadhaar-based withdrawals or micro ATMs. Now, I think those solutions, that's the second area. And third, we've like touched upon is multilingual support. That is of a primary importance. Any solutions that you want to deploy in the rural areas, I think multilingual support has to be really thought out clearly, and Vaidhi sir also mentioned that.
I think very valid point. Really appreciate the kind of discussion we are having it. Right. The next question, I'll go to Mr. Shekhar again. We see a lot of infusion in the banking space, like FinTech, you know, and a lot of other players are coming. Even, you know, insurance are getting into banking space. And, you know, but even if you look at automobile resellers, they get into an insurance space or financing space. How do you see this entire infusion happening, you know, the fusion of different technology? How do you see that value add comes to the customer? And, you know, we should not drop the security as well, right? So how do you see, what's your thought on it?
See, this ecosystem is going to be benefited with the advent of fintechs, I should say. A lot of people in the various fora were mentioning that they are a disruptor. I disagree. They are more of an enabler. I think it's going to be a symbiotic relationship wherein all banks, new age NBFCs, new age banks, NBFCs, legacy banks, and fintechs can collaborate and work together. One classic example I can bring to the point, which we have also been doing, is through partnerships, alliances, and primarily co-lending. Now, a lot of banks, which were not even aware of co-lending or NBFCs, let's say 5-10 years ago, today co-lending is being the norm, which even the regulator is encouraging, and for a rightful reason, right? Now, it's all about identifying the right technological partner in the fintech player. And what it can do basically is open up new geographies for you. There are certain banks, financial institutions I know who want to test or toy with a new product or new geography, but they're unable to do so because of the inherent risks. Now, if you have a fintech player or some other new age NBFC which has already done something in that market, you can piggyback on them and do a joint product definition and do a co-lending program. And that really works to everyone's benefit. The customers who were like the underserved customers or the unpenetrated markets, they also benefit because of this technological distribution. So one thing that tech has brought a lot of positive change, I would say, is distribution prowess, where you have been able to reach out to far-flung areas or areas where you wouldn't want to, let's say, open up a branch or open up new resources and spend money and want to test the market. That's where it has helped a lot. Also, like I said, it's a symbiotic relationship, but yes, your care has to be administered that, you know, finding the right tech partner may or may not be easy, but after that, it's not just, as people say, you know, I've been hearing a lot of these buzzwords like 1-minute loan, 30-second loan. It's all good to the ears, but at the end of the day, money should come back, right? I mean, you can press a button, disburse the loan, but that button is not going to get the loan back. I mean, you have to use AI, everything judiciously. You have to build AI and machine learning and tech around the business, not the other way around. So that's my key takeaway here.
Perfect. Thanks, Shekhar. Thanks for your input. I'll come to Rajesh. Rajesh, how do you see this changing landscape, and how is your bank or your opinion on how the bank should work in India on that front, right?
Yeah. Thank you. So I think in my bank, CSB Bank, we are rebuilding the bank. So we are executing the strategy which is called SBS 2030. It has got multiple dimensions, but one of the key dimensions is partnership. We strongly believe that gone are the days when customers were kind of owned by the banks. Historically, that's how banks used to behave and do things. We believe that customers are quite fungible and they'll move from bank A to bank B for 10 paisa, 20 paisa kind of difference, be it on the lending side or on the deposit side. So the partnerships, we believe, will be a very strong pillar for us, and that's where FinTech come into picture. So the work what we have done over the last 12 to 18 months is we need to provide an ecosystem for the partners to come and work with us. So we have set up a very sophisticated API ecosystem. What it does is we have got like hundreds of APIs which are ready to be consumed, and any fintech can consume those just using the credentials from our side. just provide a login password and APIs are available to them. So similar to like your App Store and Play Store, those APIs are available. In case some of the APIs are not there, we have opened up our development environment to the fintechs. Their developers can come and develop their own APIs so that all of us can save time. And that has helped a number of initiatives what we are running. Case in point, we went live with a co-branded one CSB Bank one card. It's a metal card, credit card in last December. Like the adoption is significant. We have multiple of tens of thousands of customers with us already. One of the new product what we have recently launched is again a co-branded credit card with Jupiter. Is most of us use UPIs, right? And the UPI is linked to your bank account. So I recently applied for a home loan, and they want 3 months, 6 months kind of statement depending on the bank you're dealing with. And my bank statement was this thick because they want a hard copy. Why? Correct. Because there are so many 10 rupees, 50 rupees, 100 rupees, 200 rupees transaction. All of us use that UPI. So we are now connecting the UPI to the credit card. So that kind of if you don't have funds in the account, so you've got a credit at your disposal. The second is all these small transactions don't reflect in your bank account statement. So the launch is in the CUG, and already our own staff, almost 50% of the staff has already subscribed, and we are about to go live with the product next month. All of you are invited to come and see the product. I think it's quite lucrative. We strongly believe that partnerships will play a key role in the expansion and bringing the quality or the differentiation to the customers. Loan against security is another product. So like multiple of them. Some of the fintechs are helping us with enabling new services on UPI, for example. UPI has gone international, and we are adding a few more differentiated functionalities on that. So I think there is a significant play of partnership or collaboration between banks and fintechs. I think that buzzword that fintechs are a threat to the bank, I think that's gone, and I think it's more about working together and building collaboration and building business for each other and bringing the differentiation for the customers.
Thanks, Rajesh, for the great point. I think that lead to me, with additional point I want to add, and I'll open up this for everyone to, whosoever want to answer it. We're talking about everyone is providing all sort of services, and individual customer, they don't have a relationship with just one bank. They possibly have a saving account in one bank, credit card from some other bank, home loan, insurance from some other bank. So is there a way we are talking about taking it from more beyond the collaboration as a banking for India? I'm just thinking, that I don't need to go to 10 different websites to do, banking transaction. Can there be a single integrated portal where I can get the information from all the banks based on whatever the relationship? So how do you see, that? I'm just putting it, right? It's a very vague thought process,
No, it's not vague. So I used to live in Norway before joining CSB 2 years back, and across the country over there, I didn't see even a single ATM which was a branded ATM of any bank. There are ATMs spread across like at any convenient point like India, but no branding of any bank there. All the ATMs are like supplied as a service by some service provider, and there is a fee associated with that, and every bank pay a nominal fee to the banks, and every bank pay a fee to the service provider, and there is a transaction-based fee. The model works pretty well. Now, if you can apply the same model to your other channels, I think it's your branch, for example. If you go to the airport, do you see the check-in staff from the airlines today? No, it is from the airport. So the same thing can be applied to the branches. It can be applied to the web portal. It can be applied to the any channel. Absolutely doable.
Abhijit, you want to add?
So if you go to Axis Bank mobile banking app, right, there you can link your HDFC or any bank other account, right? And this is called account aggregator platform. So in Axis Bank mobile banking app, you can actually view the statement of other banks. Obviously, it is full of your consent, and you can re-register yourself from there, right? So this particular model we are already live, right? And there are many fintechs that are also coming up with such model. Right?
Anyone else? Abhijit, you want to take it up? Yeah.
I just missed, the question was what I could sense.
Question was more on integrated banking rather than, I as a customer should not have 4 or 5 mobile banking application on my mobile phone. I should not go to 10 different websites to do 10 different transactions, maybe insurance, banking, or whatever it is. Can there be an integrated one interface for all the banks? They provide services via channel. Like Rajesh was saying that, if you go to airport, single set of staff provide services to all the airlines. One ATM provides services to all the banks. Can that be an approach in India?
So look, this is market driven. This is not a specific CSB or Axis Bank driven. It cannot be, it will not be, it hasn't happened before. UPI, you do GPay, you don't do UPI. But UPI is a platform. So today is a world of platforms. Okay, now which platform can integrate and sell it better, they will win the race. Okay. The biggies in the market, Axis Bank is one of them. They will try to put their muscle in, but that muscle have to be in a continuous basis in order to actually win the customer back. So it have to come from a product to a platform. Once they come to that, then only it will happen. Otherwise, it will not happen. So it's a very difficult question to ask or give an answer for how the market modalities will move on. That will going to define. To just one small thing to add. There are a lot of things Government of India is coming up with days. There is something already in place and something is supposed to come back. One of the thing towards this is something called account aggregator, which all we know. Now, if account aggregator is implemented properly, then this discussion will not be relevant. It will be a single platform who are going to do the account aggregation and going to go ahead. Now, who is going to win the race? You don't know it yet.
I think a very valid point. I think there is an incentive as well for the bank because it will be a cost sharing, same infrastructure, and there will be an incentive in terms of acquisition of the customer, retention of the customer, because if you give more services, integrated services, they will stay with you, right, in terms of having services. Now, I'll go back to another question. And talking about how Modi ji have been working on bringing, rural customer to the bank, right? Getting their, hard-earned cash in their villages to, deposit into the bank. It was a very important initiative that we had. So now we have done that. We have almost like all the rural people have their own accounts, right? And they have put some money in it. And at the same time, we are chasing a technology transformation, digital transformation journey. How do you see, your customers, especially from rural, are ready to go that step and adopt that particular technology? I'll come to Sekhar, if you can take up that.
See, I like those words, hard-earned cash, that's what everybody is vying for, right? I think, yes, with Janadhan accounts and everything, so formalization of data is happening. Formalization of the way you spend and earn is also taking place with GST and so in last 5 years we can see that, right? E-commerce activity has expanded because of that. Now, the thing is that in order to make the rural folks spend on certain items, that yes, that's a monetary policy, whatever the economic level, more consumption and driven by a lot of other factors. But making them consume through a platform or through a approach or through a system or channel is something that the banks are working around, right? I mean, you don't have to pay your auto guy every time you pay with cash. You can pay through, like he mentioned, through UPI or whatever. So that thing is already in momentum, as we see. I mean, a lot of digital payments are being done through UPI, and that was not the case before. Yes, cash is still an important part of the system. It's got sentimental value attached, especially if you go to places like tier 3 towns in MP or UP, even today, they prefer doing dealings in cash for a certain reason. But I think now with tokenization, which RBI has introduced, that should lend a good amount of impetus, because compared to UPI and a tokenization currency, the biggest advantage is that the advantage of anonymity. In UPI, there's a person who's transferring, and in tokenization, it's just digital currency, just changing hands. There's no, there's no biodata of you which just comes out, right? So that is going to be a big leapfrogging event, I would say. So those are one of the key factors we should watch out for. And the rest, it all depends upon global cues, whether they're going to consume or not.
I remember, sometime back, one of my colleague, a friend to be very precise, he was working in one of the rural branch of one of the leading bank in India, And he shown a photo of his branch on 2nd of month, right? The salary comes, right? People start tracking it. They're the only two folks in the branch, and they were all in the corner. Entire branch was flooded with the people. And I was just thinking, how do we solve that problem, where you have demand is more than supply. You can't address that many people at the same time. What technology, what solution? Because I'm again going back to the rural part, because in urban part, we are pretty much done. We understand people hardly come to the branches, right? But in the rural, still people goes to the branches, and they overwhelm the entire staff that are there, right? So how do you see, if I may ask Sachin, right? If your thoughts on it, how do you see, rural sector, they are not technology, savvy. They are coming to it. If you see the expansion of it, we are expanding it. But there are still a couple of states in the border areas where you don't really see, that kind of situation. How do you see that kind of problem can be solved, right? Maybe infusion of technology, like we have home banking, especially for the elders people, somebody can go and deliver the cash to their home. That kind of thought process, not a technical solution, but maybe something outside of it also, out of box.
I think I briefly answered that question earlier, but just to take it forward, and I'll give you one example. When an asset management company opens up, let's say, NFO for mutual funds, after financial institutions that invest in that NFO, the largest amount of money comes from tier 3 and tier 4 centers. They have a distribution model where the distributors are sitting in tier 3 and tier 4 towns, or even smaller villages, and they get the money. So the knowledge is there. They are quite tech savvy. The issues will be centered around, if you have to make it fully digital, that may not be possible. So it has to be a kind of a phygital model, which Shekhar mentioned earlier. We had the Sakhi model in the country, right? So we had about 100,000 women distributors, so to say, who offered banking in the rural areas. They reached out to the customers and they offered banking solutions at their doorstep. So I feel it has to be a mix of both. You cannot just rely on technology at the moment. There will be times when you can fully rely on technology, but I think probably models like this will address.
Yeah, just to add to his point, the other way is that just because technology is enabling you to transfer money on the wire does not mean they will do it. You need to incentivize them. Now, the incentivize will come through some other value-added service or something. For example, let's say if you create a scheme, just a thought, that if you transfer money officially through UPI or whatever, you'll get so-and-so cash back, or you'll get so-and-so whatever. That might now make people take that route. Otherwise, just because you are able to do it, many times we have seen there's an inertia, right? There's a pushback, that why? I have cash, I'll rather spend cash. But if you incentivize them through some economic means, yes, they will see some more action happening there.
Makes sense, absolutely makes sense. Abhijit, I'm coming to you. In the COVID time, right, the kind of digital transformation bank has done to make sure that people don't have to come to the branches, and some sort of home banking, people are delivering cashes to it. We are far more ready from a banking perspective to meet that kind of crisis in the future. But how do you see this taking as the next step? Is there any next step to it? Is there any better enhancement to it? Because talking about technology, leveraging the processes, and making sure services are enhanced. How do you see a next step for us?
Okay, yeah, I answered that, but let me respond to the last point, what he said. Believe me, my experience is cashback do not work in retail. There are some other ways, okay. the people in tier 2 and below cities come to bank for KYC reasons. That is a more prevalent reason or so. The question is how you, now the KYC is becoming more and more digital, that will become, telling a guy to, you talk to somebody in video and you get authenticated, that is a, training challenge. That's not only the, and people are ready to adopt. It's not people are not ready to adopt because they see it all around. I remember I've been to a village in remote Rajasthan, around 20 years back. That village did not have, did have 4 houses, which is the, all are breakable houses, the 4 square houses. Have around 5 or 6 tractors, 4 or 5 bikes. It's around 200 people village. Everybody had a mobile phone. And the village doesn't have electricity. I asked them, how you charge the phone? They told, okay, look, I go to the outside Kirana shop, give him 2 rupees to charge the phone. So the adaptation is in a different level. Only thing you need to know where to nudge and what not to nudge. So that's a perspective. We're coming back to the question what you asked me. So look, you pick it up, any technology guys sitting over here, and the business interaction, what happened. Everybody will tell agility is one of my key responsibility. As a tech guy, you have to need to get agility on the business. Unless you get agility on the business, you're not going to suffice. And that's precisely, I think the question is how you create the agility. Now, the tech architecture, especially after the invention of the cloud and the rapid adoption of the cloud in various ways and so on and so forth, agility has become a much more consumable stuff than what it was earlier. But the question is, what we generally miss out is where to become agile and where not to become agile. Okay, you look into the ecosystem available, everybody will tell you 5 places where you have to become agile. So you have to first decide what is your business priorities are and where you want to be agile, and then apply it accordingly. Say for example, you are a retail specific bank. Your agility need to be on the UI side. So you have to ensure you get those technologies, you put up those sort of technologies, you put up DevOps to do a quick rollout. I do app release in every 2 hours. Amazon do app release in every 5 minutes. Well, you don't know. Okay, and they do 100 of releases and they, 20 of them goes bad and then take it out. So their processes and everything is very different. Now, suppose you want to become agility on your core banking side, then the approach is very different. You have to put up a team who understand the system and create the agility around. But in terms of tools and systems, especially the adoption of the cloud, microservices, DevOps, and so on and so forth, these tools are now available in the market. Now, depending upon your business and your business requirement, you decide which tool to choose and which tool not to do. That basically gives you the increased efficiency of the overall system.
Very well said, Raj.
Just to add, I was talking to a small nugget of info. I was talking to a senior gentleman from NPCI. And he was mentioning that technology adoption is still a challenge, whether you like it or not, in rural areas, especially tier 4, tier 3 and above. He said we are trying to put a finger on that because even if you see post-demon, the level of cash in the system has gone up. That shouldn't have been the case, right, with new technological adoption, right? But so it's a dichotomy. That's what they're also working on. There's still a lot of MSME, SME players who still like to work in cash and not through technological adoption, even though they might use tech for, like he was mentioning, for KYC and other stuff. But reasons best known to them and not to be discussed in this room, we know why many of them don't use the reason, because for not concealing income and everything. So that way, you think there's a challenge. We're still facing a big Chinese wall there. But yes, over time, they're saying there has to be some way to incentivize them. We don't know what that is. We are trying with various ideas. So that's coming up from the...
Valid point. Thanks for that. So we discussed a lot of aspect of banking, how technology helping, and not only tech savvy and rural banking as customers as well. Vaidyanathan ji, if you want to share some experience of yours in the context what we spoke about, from a case study point of view, where you have been on a very unique position, and how did you, as a bank, handle the situation? Right?
Yeah, our bank is unlike any other bank that has ever started in the banking industry. I can say it with confidence because as part of the team we set up HDFC Bank in '94, It was a very nice clean slate, and you could draw anything on it and call a picture to it. But here we got a license in October, started the first branch in November. Then we acquired an existing SIC bank, which was in a suspended state for 2.5 years in January. So literally, before you could crawl, we were trying to run with a baggage on our back. So we were in a peculiar situation, and then we merged a couple of entities of our parent companies, which is the NBFC, into that. And then when I took over, we were in a peculiar situation that the existing technology that was from the erstwhile bank was in a suspended state for 2.5 years. So technology suspended for 2.5 years is like is having an first iPhone in your pocket and trying to do a Wi-Fi on it or a Bluetooth on it. I mean, it could be it was as bad. So we are actually compelled. So everything starts as somebody daydream or a necessity. So we were pushed backwards, and to keep the existing technology up and running, we had to literally spend through our nose. So and then we had a RBI audit which found all the faults that possibly any layman can find out in my technology stack, which was in a suspended state. So we were compelled to change. So we took a bold decision that the problem is the CBS has to change, and we were 120 days. So when we decided, I'm being a part of the management. I've done CBS all my life, so we took a decision that we'll change it. So we started with a timeline of 100 days, and we went around, and then from the start to finish, we literally finished off a CBS transformation in 88 days. So, just to give an example, I was having dinner at about 9:30 and 9:40 in my house, and I get a call from somewhere in US, and he said, my name is John. Can I have 5 minutes with you? I said, yes. I'm calling from a bank. We heard that you did a core banking transformation in 88 days. It's real or it's a story? I said, it's real, but I'll be happy to share the story. You're going to pay my flight tickets, or am I going to pay mine? So the thing is, everything starts as a necessity. So the problem was that given that every bank has every technology, we are on the same level playing field, and I'm last to get the license, why should somebody bank with me? So the only way to do it is technology. I can get head start by doing some, for example, a guy who buys an iPhone 15 today, he's ahead of the guy who bought iPhone 14 last year. So that but there's only time, 6 months, 3 months, but he'll catch up with you. So so every 6 months or 3 months, we have to keep evolving to find newer ways to keep ahead of the pack. And it comes to the basics. What differentiates? We have the best FD rates in the market today, but that's not the game that we want to play. We are losing ourselves, our margins are hit because of that. But that's one of the things. But technology, yes, I can leapfrog many people and change things. So we were in a peculiar situation, and we were today, I'm sitting and talking because we have done it, so happy to share that. But it was quite an effort to do that.
Fantastic. Thanks for sharing that. Abhijit, if you want to share your own experience here.
Yeah, the time is already up. I'll sum it up in 1.5 minutes, right? Yep. Yeah, sure. So, back in 2021, when we were running a couple of transformation program, digital transformation program, we figured out that the adoption in our APIs, although the number of APIs were very high, but the adoption was not that good, right? So we created, we already have that developer portal, but we started productizing our APIs, right? So it was a new concept, like, API we probably all have, right? But create a new product on top of the APIs, right? That we started creating, and we create an open ecosystem. So in our developer portal today, if you see, we have around 470 plus APIs, right? And all these are open APIs. Any FinTech startups or any developer, they can self-sign up in this portal. They can test a sandbox. Probably till sandbox, all of our peer banks are having. But what we have made is that if any corporate or any startup, they want to onboard themselves into our API ecosystem, they can onboard it completely digital way. So it's a paperless journey. Even the commercial negotiation, everything can be done over the portal. Right? So we have created a workflow, right? And last year only we got a couple of recognitions. So this is one journey. There are plenty of, right? But this one journey which is very close to my heart, because when we went to all of the control function bodies, right? They were saying that, what are you saying? Is it really possible that onboarding a corporate in your API ecosystem, right? You are giving the UAT and production access, but we made it possible. That's one story I would like to share. Yeah,
thanks, Abhijit. Thanks for sharing. We're done. Can we take a questions?
We can take one question.
Yeah, if anyone has, we just have one question, if you can. Yeah, please.
So basically, someone has touched that point that 70% people in India are having smartphone and rest 30% are not using the smartphone. So from the layman's point of view, I think this subject has not been touched in this forum. So CBDC, central bank digital currency. So what is your opinion? Because in today's era, there are, after COVID, I can say, so many people are comfortable with GPay, UPI, so many payment apps. And government is trying to introduce a new payment method, that is CBDC. So question is that, is this, what do you think, is this going to be a success? First thing. And second question, if government run this, and what happens like our government has started 2000, then closed the 2000, what the common man or layman can do with that?
Suresh, you want to answer that question?
So initially, I told you I will share my thing on the security. That is not covered, that's why.
Okay, so anyone? Yeah, Abhijit, sorry. Yeah, go ahead.
Yeah, look, definition of a success is very, very different, very difficult to measure. If you are asking, will that be as successful as UPI? The answer is no. The pure reason is the CBDC use cases are very different than UPI. UPI is retail payment and CBDC is a digital currency. The usefulness of CBDC, we're going to see what, according to the paper, what RBI is asking, it's not my words, is more on trade, more on international transfers. Now think about if you have a digital currency and the digital currency and a crypto world is accepted in France and you do the transaction over there, sitting over here. So that is the use case of it. If you see exactly, it is a vis-a-vis equivalent of our currency note, what we have, 500 rupees note versus 500 digital currency, you may be little disappointed of what it is. Because the digital, the payment solution for the users, it has already been solved by UPI. There is nothing else to solve as of now. There are maybe some use cases will going to come which is beyond it, sharing of the wallet or so on and so forth. This is going to get improved. But digital currency is a very, very different concept. It is not equivalent to the customer payment what UPI does. Answer that?
Thanks, Abhijit.
I'll just make one point on this. Digital currencies themselves are a solution looking for a problem. Okay, there is literally, if you have an equivalent of a UPI or any kind of really smooth, fast digital transaction system, digital currencies are a complete waste of time. They are useful, they are important right now only because the Americans don't trust their government and they don't trust their systems. In a high trust model, that should not actually even occur.
You want to add?
See, one point about UPI, right? And probably, if you can compare with our counterparts in US, if you go to any Fed bank, right? The digital money transfer they do, even if you want to transfer your wealth account to another wealth account, that will charge. But in UPI, it's completely free. But again, the success metrics for bank is nothing because we are not earning. I mean, there is no MBR and all, right? But still, UPI is a success. Now, CBDC, it has a different use case. If you talk about the cross-border remittance, which is the future, right? If you see the forex transactions and all, the way trade finance transactions are happening today. So it's all game about the large ticket size. So their CBDC will be a success. And I mean, probably you know which all banks have already implemented, right? And the feedback is not that bad. But if we consider it with UPI, right? If we compare it with UPI or retail, then the comparison is not good, right?
Thanks. You want to add? Yeah.
Yeah, let me share with some of the experiences. This is not a case study or something like that. This is based upon discussion with the regulators and other things, especially RBI and other team, post the audit. So, the regulators are not against that doing something by the banks or other institutions. But their rule is very clear. When they audit your environment, they clearly and precisely focus on three things: your people, your process, and your technology. Very simple. Regulators' view is very clear. People. This is the weakest link in the cybersecurity. whether your bank is having a foolproof system to ensure your people are trained right from the day one, onboarding itself. Not one time, it should be a continuous activity. And they should be made aware of what is happening on the cyber security. And not only the employees and your customers also should be aware of these things. Then second things, your bank is having a process. Process to implement, this process is the key element to implement any policies, whether it's a cyber security or what credit policy or whatever may be it. Do you have a policy in place? And whether this policy is reviewed on a periodic basis, and whether this is approved by your board or not. And the third thing, technology. And even in the technology, there are different segments. Like first thing, starting from the OS, then the applications, then your database, and the fourth one is your network. Again, on the network segment, you will have the internal network, you will have the external network. Correct. So whether all these things are streamlined properly and followed as per the guideline, rest assured, at least you can protect something. It's not, security is an evolving thing, sir. If I say that my system, my bank is protected, it is only for that point of time only. The next time it is prone to vulnerability. It's not, see, I have seen that thing. Many, during the discussion with the regulators, they say that certain banks will have the best solutions in place. Typically, for example, Microsoft releases their OS patches on second Tuesday of every month. Everybody is aware of it. You have a Paka system in place. This will get downloaded and tested in the UAT and put it across, centrally pushed across all your servers and endpoints. But remember, there are certain critical patches which can get affected only if there is a restart taking place. If the server is not restarted, your system is prone to vulnerability. Like the antiviruses. Patches are, when OEM releases the patches on a periodic basis, weekly basis, monthly basis, and other things. You have a system in place where all these patches are getting downloaded and applied across all your endpoints. But unfortunately, server is not restarted means, again prone to vulnerability. Correct. So this is what is some of the best things which we can go back and make it a practice. Just ensure that rest is assured. At least 75% of all the cyber incidents we can prevent ourselves. And also with the vendors, while dealing with the vendors, our mighty is just ask them to get certificate of integrity. That's a must. Along with the PO, before handing over the PO, put a clause over there. I will make payment only when you show your certificate of integrity. If that is not there, don't give the PO. Call like that thing. These are some of the best practices which we can follow it across, not only for our bank, any bank can follow. If you go back to the Gopalakrishna Committee report, there is a specific clause is there. The bank can audit the vendor environment. Are we doing that thing? No. There is a clause is there. But fortunately, that digital personal data protection bill is now live, and you would have seen the penalty and other things. It is something around 250 crores for violation. Now all these things will come into effect. So this is from my experiences, I shared it with you. Thank you.
Thanks, Rishi. Thank you very much. I think we have come to the end of the session. Thanks everyone for participating and sharing your knowledge. It has been a good session. It's learning for me as well. I'm sure audience has also learned from this session. Thank you very much. I'll bypass to you.
Thank you so much. Let's give a big round of applause to all our panelists.